StockOdds St. Patrick's Day, I guess, green edition. Good evening, Rob. Hopefully it's a green week.
Yeah, that's a great one. Hopefully you guys have a very lucky, successful week. And maybe we have some tidbits here for you on this St. Patty's Day. So, and we do have some green on screen, right? So you can't pinch me, Dave. We got green up here. Okay? All right.
Just
So
pinch
this
pennies.
is what's that?
Just pinching pennies, that's it.
Yeah, exactly. So this was Friday, how we ended Friday. It was expiration quarterly. And we kind of were drifting down a little bit pre-market. And we did have a little bit of economic news, of course, but it just started to, taper off, slide off. And we had quite an anomaly between the cash and the futures market. So there was actually some good trading there on the opening only orders. We proceeded to kind of bounce around back and forth over VWAP and close the day still discounted. So that was how Friday went. And then this is the app or the 15-minute chart for the week. So March the 8th, we were elevated on the Friday and came down. So this was the start of the week right here on Monday. You can see Monday's open price. And so we opened there, dipped, and then kind of recovered and had a interesting sort of end of the day. And then the next morning popped up and climbed. And then we got into the PPI report and weekly initial claims, which knocked it down on Thursday. And had that late day rally, which is kind of interesting. And there was a bit of a fat finger trade that kind of went on here, something we really dived real quickly. And that actually happened on Wednesday too, briefly right near the end. So something going on where all of a sudden sellers are coming in, and maybe they're privy to some information or just looking at how the market conditions are getting pretty overheated. And then quarterly expiration, was down as we discussed earlier. So there wasn't much change on the week if we opened here and closed here. It wasn't a big week open to close. Very almost unchanged. Here's the SPY daily. You can see we're sitting right on that 20-day moving average here with Friday's action. So anything's possible in terms of this next week moving up. And there is phenomena to kind of having a different week after an expiration week, almost like bounces back or something. So it could be possible for it to rally. You have to allow for that as a scenario. It could also be that the market is getting a bit tired and sellers get the upper hand. And because we did have 2 down days here with higher volume, if you notice this. So that might kick in more and we might go back down to test the 500 or go and fill this gap here on the daily, which has not yet been filled. So that might be a possibility, is to actually go a little bit below the 500 to like 490, 496, 497, somewhere in there. Here's the Qs daily. You can see a little bit weaker than the S&P 500. Some of the banks have been holding up. Some of the industrials have been holding up the S&P 500 a little better. And with the pure technology, it's overall, we haven't quite seen the leadership of the mega caps as we once did. So it's getting a bit top heavy in here. And that's just relieving some of the pressure. You can see even on the RSI, it's kind of back to its midpoint here, close to 50. So some of that pressure's come off. Here's the diamonds, and definitely not acting like we had from November through to the end of the year. That was quite a high signal, very low noise, walking up the upper Bollinger Band type move for the Dow, and that was very interesting. But not getting that now. And then here's the Russell, did pull back, finally played catch up, but now come under a bit of pressure, similar to what you see with the Qs. Sector performance for Friday and for the week. You can see just with the pure sector spiders that XLY, discretionary, and real estate was hit the most. XLY, partly the Tesla impact, and for real estate, partly the fact that the bonds sold off and the yields rallied during the week. So that put a lot of pressure on the real estate. Energy had a great week, up 3.84%, as it once in a while does. And the Russell was weaker of the four horsemen up here. Oh, I should say that relative volumes, expiration Friday had really, really robust volumes across all of them. Obviously, the SPY is still one of the leaders in terms of volume, followed by the Qs, and then the XLF financials, and then the Russell. Here's the performance for Friday and for the week. Basic materials benefited on Friday from the dollar, and also for the week came in third place. And that's the US dollar was a bit stronger this week than it had been the previous week. And energy benefited from that on Friday in third place, but in first place for the week. And again, this is the broader market, not just the sector spiders. So that's why you see a difference in energy's performance here versus the previous slide. Technology suffered Friday, and also down in third from the bottom in terms of the week. Communication services did okay for the week, though, as Google kind of clawed its way back a bit from the previous week's weakness. Here's the map of the market for Friday. You can see Adobe, getting hammered pretty good. Amazon down. Tesla actually bounced back a little bit on Friday. And here's your AMD trying to play a bit of catch up in what Nvidia's been doing. You can see some strength in the banking and industrials here. Now here's for the week. So Oracle had a phenomenal week as it gapped up. We'll look at that a bit later. Adobe going the other way. So Nvidia pretty much flat on the week. AMD had a bad week, except for Friday. Friday kind of rallied, clawed back a bit. And then there's your Google for the week that I mentioned before. And it helped communication along with Disney and so on. Meta had a bad week, though. And here's your Tesla problem for the week, even though Friday it was not so bad. Real estate suffering. Boeing suffering badly. Boeing's had a lot of problems. And remember, that's probably holding the Dow back quite a bit, too. Okay. Here's the daily chart of Nvidia. You can see that we had that big spike last week on Thursday or Friday, what it was? Friday, I guess. And then this week hasn't really retested it. So, we're getting a bit of a pattern forming here that could break out one way or the other. Some might look at it and say that's a bullish pennant, and at the same time, it doesn't mean that it has to go up. But AI is still a hot topic. Here's super microcomputer. Now, this is the hardware side of things. You can see what it's done really since the beginning of the year. I mean, we had a long channel and it broke up, and it's had just phenomenal returns here. But it's it's getting a bit over-talked at the moment. And it's the hardware side, as I mentioned. Now, look at this on the monthly chart.
Wow.
Yeah, that never did anything for how many years? Never did anything. And then last year, of course, that AI really started in sort of the March through May, and we just kind of took off from there. And so those that did their homework may have been able to get a little chunk of this one. Did try to shake everybody out here for a few months, but these last 3 months here have been mind-blowing.
Mhm.
So almost a GME style move there.
Yeah.
So here's Oracle. I brought this up because, Oracle is one of those been around forever, kind of your boring stocks, but it is a tech play. It is hardware as well, and software both. And but it had this big gap up here, and it's starting to, even though Friday it dipped and then rallied back. If this starts to get more traction here on the downside and breaks below Friday's low, there is a substantial gap to fill in one of these stocks where you can see this is not a super microcomputer chart, nor is it an Nvidia chart. So just keep that in mind. There might be an opportunity for a gap fill or some form of retracement there. And again, I'm not an advisor, just pointing out the appeal if this does confirm. And of course, it could rally back, and everybody loves to upgrade things a gap like that, so it could rally back. Here's that daily chart of old-fashioned gold. Again, it's been really strong, and it's just been slipping a little bit this week, even though the dollar was a bit stronger. And then here's the new sexy gold, BTC, that did make a new high, all-time high, but pulled back a little bit and dipped into that 65,000. So it's getting a little bit more volatile again versus what it was doing. It's quite subdued until more recently here. So here's the currencies. You can see that US dollar for the week popped up a bit. Some of the commodity-based countries, like Canada, Australia, New Zealand, pulling back. Japan's going to be an interesting one to watch. You probably need to keep that in your, left corner of your screen somewhere, just to keep an eye on the Japanese yen. Here's the 10-year yield, or 10-year note, and you can see it's sliding down, which means the yields moved higher. And that's a substantial move for 1 week, just like we saw the previous week where we rallied. And yields dropped. We had the reverse. So the narrative kind of shifted a bit, and we're going to be getting into FOMC meeting this week. So Dave can talk about that in a moment here. Here's our economic calendar. Take it away, Dave.
Yeah, so there's a couple themes for the week. It's mostly housing and the Fed. So Monday we have home builder confidence, followed by housing starts and building permits on Tuesday. And then in terms of housing, we have Thursday existing home sales. And I think there's some earnings too for KB Home. So that's one theme to also gauge the consumer. How are they holding up our prices as well? But the big story for the week will be Wednesday, the FOMC interest rate decision on Wednesday at 2 p.m., followed by the press conference afterwards. So that's going to be the main thing. But there's a 99% chance on the CME Fed tool that there's going to be no change. So no one's really expecting a decrease in interest rates this month. But as we get further out throughout the year, the probabilities are increasing for some kind of easing. And there's a bit of services and manufacturing PMI as well. But the main thing is Fed speak. Also, Powell's going to speak on Friday, and on Thursday as well. There's some more Fed speak. So, but the big thing is Wednesday. There shouldn't be any big surprises, but just something that maybe the market pauses before that. But that's that.
On the earnings calendar.
Yeah, so there's three big ones for sure. On Wednesday, we've got Micron, so that's going to be a chip story. Thursday, we have FedEx and Nike. But on this chart here, you have to really pay attention to which ones are reporting before opens and which ones are reporting after the close. But I think Wednesday has some more of the interesting ones. KB Homes, like I mentioned, that's after the close. And on Thursday, after the close, we've got Nike, that's a huge one, FedEx, Lululemon. So again, those are retail stories to show strength of the consumer. But again, this is a nice calendar to look at for the week as well.
Yeah, definitely. I mean, it's getting, and we're not even into April yet, and it's getting a bit busier on the earnings calendar. But for us, a lot of times it really kicks off when the brokers, and the main characters in the S&P 500 start to report. So, but you always have to keep your eye on it and use it where you can. So, yeah. A couple notes here I got. So the Pope tells Zelensky to negotiate, maybe not necessarily wave the white flag, but move in the direction of white flag type negotiations. Overall, support for the Ukraine is slowing globally, and as this war goes on longer and longer. And of course, what we've had here recently, Putin elected for another term. Surprise, surprise, right? No surprise. And he is going to be emboldened by that to continue on his special military operation. Japan stocks are rallying on the Bank of Japan expectations of raising rates. So think about that for a moment. Why would the stocks rally with the Bank of Japan raising rates? Well, probably because it shows some, think of Japan has been in this stagflation forever. Was it going on 20, 30 years now almost?
Yeah.
So this shows some strength in the economy, which could encourage investors. And also inflation could mean higher prices. As I look through the landscape of, elevated prices that went up dramatically with the big impact of the initial inflation, and supply chain stuff. And some have tapered off. There are some prices that have kind of pulled back a little bit, but many have not. And so you have to question, is it kind of an excuse to get better profit margins? And I think that's the way it could be viewed here, is rising prices could mean better margins for these companies. So better economy, better margins. And I think that's why you might see this stocks rallying, because you might expect the opposite. It's like, well, if they're going to raise rates, the market's going to sell off. So how will that impact us? Well, if our market's quite elevated and we've got very healthy US dollars, and there has been a carry trade going on where money has been borrowed from Japan and put into the US market, then it could be a situation where that money goes back, and that could take some wind out of our US market sales. Make sense, Dave?
Yeah. Unwinding the carry trade.
I think do you still see my screen? It disappeared on me here.
I see the screen.
Okay. Okay. What else we got here? Oh, Reddit IPO could be as much as 5 times oversubscribed. A $31 to $34 price target is probably reasonable at this point with that oversubscription. So fairly significant IPO. Well followed, well utilized overall. I think they have like 75 or so million uniques a day. I mean, that's people that use it at least once a day. Gold miners aren't hedging at these higher prices as in years past. So normally what happens when gold either is at a real low or a real high, there's a lot of utilization of futures. And in this case, they aren't They aren't paying that insurance. They aren't hedging at these higher prices. So they're making some better money now, but they're not willing to hedge it off. So that means they're probably still expecting, prices to rise. What I found interesting, if we roll back a little bit to this gold, versus Bitcoin, they both rallied almost, over the same period here. And recently, this last week, as they pulled back together too. See that? It's interesting. So yeah, what else we got? Anything? No, that's it. All done, Dave.
All right.
Well,
Let's
wish
see some
everyone
gain
a
this
good
week.
trading week. Yeah. All right. Take
Good
care.
luck.
Take it easy.